This video is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC and Felix Fry are not registered investment advisors. Options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. Hey everyone, we're taking a look at Plug, PLUG. Earnings are out. Let's see what the options market's telling us today. So again, we land at the homepage here, and I'm going to use 100 results. I'm going to use greater than 2 weeks. Immediately, I see this large trade, couple of large trades. That's Ford, AMC. Don't really look at Disney, Johnny John. Although this is nothing here. This is a non-event. Don't need to look at that. The DraftKings, additional trade from yesterday. 10,000 more. Looks like he's selling 10,000 more puts to 22 and a half. That's something to look at. But I'm going to look at this one, the largest trade on the board today, Plug. He's in June 2024. Earnings are out today. The stock is down pretty big here. So let's take a look at what happened. He has 38,000 versus 69,000. Again, this box is total number of contracts per strike. Okay, strikes by volume. Okay, and these are actual prints at any one time. So here we have plug 38.5 64 150 June 21st 2024. So that's next June, and they are, looks like they are buying above the ask, buying the 7.5 puts. Confirmation of that, looks like there's a positive IV change here. So it does look like there's demand. Positive IV means buying. Also above the ask means buying. So $1.41 he's paying for 64,150, which is about, let's just call it $9 million, somewhere around 9 million bucks. And under 38,500, it looks like he's selling these calls. So he's selling these calls 38,500 times at 235, and he's buying 64,150 of the 7.5 puts for $1.41. 235 times 38,500 is going to be, it's probably going to be around $9 million as well. It's close. Yeah, it's going to be around $9 million as well. So you have 9 million, 9 million. So he's doing this basically dollar neutral. He's not spending any money. He's taking in 2,034 cents, 2,035 cents, this amount of times, 38,500. And he is paying $1.41, but he's able to buy more contracts, 64,150. It's on a spread, tells you here in the condition. Stock was down, stock was 946 at the time. It's down further from there. It's at 926 now, and it traded at 1043.18. You can see the exact time is the same. So I always double check that to see if where the spreads are. If I can't find, if they're not right next to each other, I'm just looking, I can just sort by time and see which ones traded together. Okay, so let's go back to size here. Okay, and now I want to see, I want to start thinking about why he's doing this. So my first guess is that this is a large player, obviously. He's 3.8 million shares and 6.4 million shares on the put side. I'm going to take a look at the news in a second, but my first inclination is that he's selling stock. He's using this right now as a way to get short, one, but two, it's likely he's out there selling stock. And I say that because in general, this is a high growth potential name, and you generally don't sell, let's call it 6% out of the money calls a year out, almost. Let's call it 10 months, 10, 11 months out. You normally don't do that. You're in these names because a $9 stock now, or it was almost 11 yesterday, but a $9 stock now, you're in a name because you think it could go to 20 or 30 or 40. You know, that's what these growth names do. That's why you're in it. So selling $10 calls 10 months out caps any of that. And I guess the point is, why would you even be in the stock if you're going to cap it just up a couple of points? So I believe, I suspect that they are selling the stock. They're using this as a way to get short ahead of that sale. Now, who would do that? Who would do that? Well, but I'm looking at the holders here of Plug, and immediately, I mean, BlackRock's on every name, but of the names that would do 6.5 million shares, 6 million shares, I don't think it would be any of these guys. I think BlackRock is the one doing this. Maybe they're trying to get out of stock and they're putting in this trade for right now. So 13% of their holdings they could collar. It's called the collar here on the 7.5 line on the puts while they're also trying to sell. Maybe they're trying to sell another 10, 15 million shares. So that's going to put pressure on the stock. They're putting this on just to get ahead of that. Let's take a look at the earnings quickly. So this company is bleeding money. They're not going to be profitable for the next couple of years. They did guide revenues a little bit higher than what consensus was. So the midpoint here is 1.3 versus 1.28. It looks like loss is $250 million. That's a lot. They're probably going to have to raise some money. And here you go. The company said it is evaluating several financing options with counterparties, including the U.S. Department of Energy loan program. So I suspect they probably get the loan. If hydrogen production is a viable solution for this clean world, then they probably get this loan from the Department of Energy. I don't know when, but that probably does happen if this is something that the government says we need another outlet just in case plan A doesn't work. Maybe plan B is hydrogen. So they're gonna have to raise money. I read in another article they made a comment that hydrogen production is pushed out another 6 months, which is obviously not good. It's frustrating for the investors, and you could see investors just blowing out here after this huge slide and simply waiting until they can get a better handle as to when production will be on time. Right. So, if they're not going to be profitable, and we're talking about a multi-billion-dollar company, $5.5 billion, they make no money. They're bleeding money. They're going to have to get bigger loans. And who knows if who knows that product hydrogen is going to be the solution that everyone attaches themselves to. So that's something that is weighing the stock today. You don't need technical analysis to tell you this doesn't look good, this chart. Let's take a look at the daily. So yeah, we have a situation here where potentially breaking the lows, and we have the lows near 7.5, which is exactly where I'm going to call it BlackRock. It looks like them, where they are basically buying puts. So they have capped there. I mean, think about what they're doing here. They have capped themselves at 10, and they're looking at the 7.5 line. I mean, this should just tell you that after a long way down, they're capping themselves here for the next 10 months. It's just generally not something someone does. So they're probably taking the stock and blasting it and thinking to themselves, we're going to try to sell 15 to 25 million shares. What could that do to the stock? It could crush it. And 7.5 would become vulnerable. And if it breaks the lows, you're going to get these people who bought over here, this volume, to turn and sell. So the stock doesn't look so good. And this trade is telling me that they are sellers of stock. So that's my read. Unfortunately, if you're long Plug, I suspect you have a very large seller on top of you here. And at the very least, it's dead money for a few months while this seller's getting out. New investors need to get in. You want to watch 7.5. At 7.5, if that breaks, you're going to get all the people in the last 3 months who were buying this thing to bail out, could easily drop it towards the 5, 6 level. That's Plug. I'll see you tomorrow.